These are the top 4 stocks I'm looking to buy right now. What's up team, John from Beginner Trading here, and I hope you're having a good day today. These are 4 stocks that I'm really interested in seeing rebound throughout the summer. I think the market dropped a decent amount the last few days of last week, and so with that, in my opinion, we do have somewhat of a dip buying opportunity. Still, I do want to preface the rest of this video that I'm not an investing or market expert, and this is just purely my opinion. If you appreciate free day trading and investing content like this, make sure to hit the like button to support us, click the bell, and subscribe button so you turn on notifications, and let's take a look at these 4 stocks. The first one on my list today is Disney. The reason I like Disney here is because it's still down 25% from the highs in the last year and is looking like it might rebound once the economy continues back to its normal self, if and when. With that, the park should see a noticeable bounce back as well, as they have been shut down for a while now, and once people start to get back into their normal routine with these type of parks, and considering summertime is here, I think all these things will only add up to strength in Disney's eyes. Another interesting dynamic here is that Disney owns ESPN, A&E, FX, and 21st Century Fox, and so as sports starts to return back to normal, sporting entertainment opens back up here, I think we'll see a noticeable push up in the Disney stock with that as well. Of course, if another wave of COVID hits, we could see a quick slump in their chart, but as time goes on, I think they are healthy enough to pull through and bounce a little bit into the summer. Looking into their digital media as well with Disney Plus streaming services, there should also be somewhat immunity to the virus itself. If the virus does get worse, they still have Disney Plus and again digital streaming media to prop them up, and especially when you consider their latest earnings report in May showed direct-to-consumer revenue, which does include streaming, nearly quadrupled up to $4.12 billion. I feel like that's a pretty optimistic sign that can give us confidence in Disney Plus's model. Looking at the technical side, we are actually sitting above a pretty major support at the $100 level, and even when looking a little bit more at shorter term technicals, there seems to be a major support level also at around 110 that should help prop this stock up as well. And so using either the 100 or the 110 level as a risk point doesn't seem too bad here, but only time will tell as we are all waiting on how the economy will react to the latest news and volatility. The second stock on my list today is United Airlines, and I think the entire airline industry as a whole should bounce back from this previous drop in the last week and boost into the summer. Now, if you did not catch my last investing video where I called out United Airlines, I ended up getting in at $25.50 a few weeks ago before this latest run-up. With that, I took profits 35% higher where I eventually exited and had a really nice win despite a lot of people telling me that it wouldn't turn out well. Currently, United Airlines is just under $40, and like I just said, I think as summer starts to become closer and closer, the entire airline sector as a whole should rebound even more, especially if the economy starts to roll back to its normal self and travel restrictions loosen up even more from where they are now. With that, I don't mind looking for a short-term bounce in the airlines for this summer specifically, as I see these as pretty essential businesses. The real story behind airlines here in the last few weeks and months is that people need to fly. It's not a luxury, it's something that people actually need here, and so with that, I think airlines rebounded a lot faster than many people thought they would, and now that we're back down to the $40 level, again, I still think the United Airlines stock is objectively cheap, and I think we'll probably get a rebound into the summer more and more as people start to travel more, stay at hotels, and ultimately fly. Looking into the technicals, United Airlines does have some confirmed support around $33 to help hold it up as well, and so that is a short-term risk I'm looking at this point, and still, I also don't mind the $25 level as an exit spot too. In the end, my plan is to hold these through the summer, hopefully riding up the momentum from the added boost in the economy, and we'll see how this goes. Let me know what you think. The next one on my list today might seem a little contrary to what a lot of other people are thinking, but I'm actually looking at Uber for a buy here. Now, to explain my logic here, the first thing you want to understand is that Uber is still actually trying to achieve profitability, but that's not deterring me from buying this one short term quite yet. Even after their missed acquisition of Grubhub, I still think there's some optimistic signs in Uber's continued short term success for the rest of this year, especially during this summer. The reason for that is that Uber's business is mostly dominated by its ride-sharing aspect. And with that, as the economy starts to come back, I think the ride-sharing business will ultimately get an increase over the next few months. Now, I know we're also going to see a drop in food delivery with that because I knew food delivery dominated the current pandemic space, but again, I think considering the fact that most of Uber's business is ride-sharing, I think that's ultimately going to be a positive in that regard. Now, with all of that said, I do think Uber is going to continue to push up for the rest of this year. And so to explain that logic, you also have to look back. Yes, they did miss out on the Grubhub acquisition, and that is going to cause some competition in their wake. But at the same time, usually when an acquisition like this happens, there is a transitionary period for them to get everything rolling with regulation, getting everything in the books, so forth and so on. And so I think that's going to present a short-term opportunity with Uber, and we might see it rise up to, in my opinion, the $40 level, maybe the $45 level that they were ultimately shooting for in their IPO. Only time will tell here, and I do think the ride-sharing business is going to get a boost as the economy starts to come back. You know, summer's here, people are going to be leaving their houses more, especially when you consider that the lockdown restrictions are going to start easing up, in my opinion, and even if they don't, they can always fall back to the Uber Eats model as well, which is growing pretty quickly over time. Now, with that, the ride-sharing aspect is definitely a larger part of their business, but again, I think that will only grow over time, and so let me know what you think about this one. And the last one on my list today is MGM. I think the entire hospitality industry should get a boost this summer. Let's take a look at why. The reason this one is on my list right now is to go with the overarching theme of this video, which is that the economy should start to roll back even more, in my opinion, throughout the summer. People are going to start flying more, people are going to start ultimately traveling more, and so with that, they're going to stay at hotels more as well, and the entire hospitality and casino industry should get an upcoming boost as the summer gets here and starts to go into action. You know, a lot of people are expecting the hospitality and casino industry to get a bounce for the rest of this year, again, as the economy rolls back to normal. And with that, I think it looks pretty cheap considering it's down around 45% from its highs at $34.64 this year, and it's also right around some pretty solid support levels as well. My logic with this is that considering it's down so much still, we had a really nice pullback in the last few days of last week, giving us a really cheap opportunity to buy into MGM here. And when I do trade this one, I'm ultimately looking for around $25 to $30 as my price target level. Now, ultimately, we'll have to see what happens with this one. Obviously, like I've said many times in this video, if the economy does start to come back down, starting to break lows, I'm going to exit this position. But yeah, I think giving myself a $15 risk level, considering how far up the potential upside and my potential reward target is around $30 or so, I think that makes a lot of plausible short-term investment sense. And when you take into consideration the fact that the hospitality industry should get a benefit as the economy comes back, people start leaving their houses more, again, I think it makes a lot of sense for a short-term investment, but only time will tell on this one, as always. For those that are still joining us, I really appreciate you sticking by with this video. And again, if you want to help support us, remember to subscribe and like this video. And if you click the bell, you'll get alerts every time we do go live. If you want to see more free day trading and investing content, I suggest you check out our playlist section. In it, we have a lot of free day trading classes and courses, as well as some swing trading and investing content as well. You can also go check out our latest video where Mitch picks out the top 3 penny stocks that he's looking at right now. And you can also check out the video before that from where I taught my wife how to day trade. And in that video, I really break down the different steps and concepts for a beginner to really grasp what we're talking about when we're trading. Remember team, we do day trade live for free on stream every weekday morning. While we don't claim to be experts or gurus, but you can watch all of our trades to see if we're actually profitable or not when we talk about stuff like this. Another thing is that a lot of times YouTubers and investors will make videos like this, and then when they're wrong, they'll blame the market and a lot of different other things with it. The stock market is simply about psychology and how people react to certain biases, and so with that, that's the major understanding here. The stocks could very easily go the other way, nothing is set in stone, and only time will tell what really happens here. Remember that investing, and especially trading, does carry with it a ton of risk, and so you want to make sure you only risk what you're comfortable with losing, and you take the time to actually learn before you use any significant sizing in the market. Anyways, guys, that's it for this one. Remember, we'll be back live streaming Monday morning, and so we'll hope you'll see you then, and good luck in the markets, guys.